Hi, hope you're all keeping well. I'm Kareem from Expat Republic, if you don't know me already. And we are a media company based in the Netherlands. As you can see, I'm in the Netherlands. Uh, currently on holiday, so thank you so much for joining us. Yeah, so I'm Kareem from Expat Republic, and we run events, webinars, write all kinds of cool content to basically help internationals with their life in the Netherlands. And so, yeah, Netherlands, beautiful country, a lot of things going on. Maybe you've moved here, uh, you know, you love it so much, it's great. You've decided to buy a house. Uh, Interest rates went crazy on you. The housing market went crazy on you. Luckily, you maybe bought a house. And so yeah, just to make sure, you think to yourself, why not? Let's move, let's upgrade. Maybe you're starting a family. For whatever reason, you maybe need to move house. Um, you know, and so that's why we have these wonderful speakers today. We have Robin and Egle from Mr. Mortgage, and they are really like an awesome, probably like most well-known, awesome, mortgage provider for expats. They do all kinds of mortgages for internationals, and they're really experts on this. They've been doing it for several years. Really great team, and they're here to tell us about this whole kind of funny process of how it works when you move, how to maybe get a bridge. I mean, there's just quite a lot of stuff in there, but there's also some huge opportunities because don't forget you've built up a lot of equity in your home over the years, and now maybe you're looking to make the transition. So I hand it over to our wonderful speakers. I see the question coming already. Yes, we will be recording this webinar, and yes, you will get a copy of it. And of course, at the end, if you do have questions, we have a Q&A session, and you're also welcome to book an appointment with Mr. Mortgage free of charge to see if they can help you. So without further ado, our wonderful speakers, I hand it over to them.
Perfect. Thank you so much for the fantastic introduction, Kareem. You make me blush. Uh,
Oh, makes me warm
yeah,
and fuzzy inside. Thanks,
yeah.
Robin.
Well, that's what we do it for. Everybody, thank you for joining. First of all, one thing, want to get it out of the way. I would never presume to call myself Mr. Mortgage. That's just the company name. I'm one of the people working here very happily, and I'm very excited to tell you everything about mortgages, and more specifically about when moving homes. So moving one when you already own a home to the next property. Now, we do everything when it comes to mortgages, so don't worry. And indeed, we'll walk you through the whole presentation here. If you have any questions, you feel free to put them in the chat. Just know that we'll answer the questions at the end of this presentation. So first presentation, think of all the questions you have, pop them in the chat. That's perfectly fine, and we'll discuss them at the end. Now, if there would be very specific questions about your personal situation, we can see if we can kind of already address them as well. But it could well be that it makes a bit more sense to discuss that in a personal call. With all those administrative notifications out of the way, let's get stuck in. Mortgages and moving home. So let's get to it. So first off, of course, I want to introduce you to our team. We're with my four wonderful colleagues. If you can, well, yeah, it's a quite recent photo. Just add the glasses and you can recognize me from the second one from the left. Cesar, Lisa, and Özkan are trusted fellow financial specialists, and together we try to form like a mortgage Google. Anything you need to know about mortgages in any different situation, just check in with us, and I know we will find the answer for you and the best way to deal with your specific situation. And of course, right smack in the middle right there is Egle. You can also see her right there, our growth marketeer, helping us, getting us out there into the world, and that you could get to know us and we get to know you, and we can help you with anything you need, really. Now, what is that anything you need? We are a mortgage specialist, a brokerage firm specialized in service for expats and internationals, and any other situation that might be out of the ordinary, also including when you're self-employed or an entrepreneur, if you have a company history in abroad as well, anything you need, really. I'll get to that. Our information obviously will all be in English, our website, but also our communication during our service will be in English, and we also supply translations for the bank documents, because they will have to be in Dutch. We'll make sure that you actually understand what you're signing. Might be interesting to know what you're getting yourself into, of course. Now, we work with pretty much all available banks in the Netherlands, whether it's for regular mortgages, also investment mortgages, whatever you need. So that's 30 plus mortgage lenders, providers. We are a priority partner of the majority of these lenders as well. What this means is that we have expertise when it comes to working with experts internationals, and you need that when you want to guide you guys in the whole maze of mortgages in the Netherlands, and the paper mill that you can call it as well. Because a lot of things to know, but if you know your way around, you're perfectly fine. It doesn't have to be as daunting as it might seem. What this means is that we can get regular interest rates for with banks that usually charge a bit higher interest rate when it comes to people outside the EU, for instance. So we can just make sure that you can get the best deal available. And very important, we are fully transparent about our fees. We don't have any hidden fees. We also don't like that it just stacks up, and up. Just from the start, you already know what our fee is and what you can expect in the future. Now, all that being said, what do you get for that fee? Now, this is our service. Anything when it comes to mortgages, like I already mentioned. Residential mortgages, so that's the property that you live in and the financing for this. Whether it's your first house or that you want to move to the next house, maybe you want to live a bit larger, maybe you have plans that require that, or the other way around, that you say, well, no, yeah, I lived in a very large house, and let's go for a smaller apartment in the city center, for instance, wherever that might be. That's also something we can do. Now, newly built, of course, so when you want to buy a property that is in construction right now or will be in construction, different situation altogether. Buy-to-let mortgages, so investment mortgages, where you buy it and then rent it out. Or if you already own a property and you want to rent that out, also known as keep-to-let. Refinance, so when you want to change your interest rate, maybe you secured your mortgage a year ago, the interest rates were higher, and next year they're expected to be significantly lower, so then we can help you with that as well. Or if you have a life-changing event in the sense of, for instance, a divorce, so how do you deal with that? What are the things to consider, and how can you arrange your mortgage? Also the other way around, which is a bit of a more positive note. If you meet somebody and you want to add them to your mortgage or to the ownership deed, we can also help you with that. Everything mortgages, basically. Now, before we start, let me discuss a bit of what you can expect from this presentation. Because now we've discussed everything about what we do, but let me explain what kind of information we'll supply today. So what you can expect is kind of an insight in the Dutch housing market. How does it work with financing options? So when you move to a new property, so what is a bridging loan? How does it work? Porting your interest rate, so continuing your interest rate on a new house, how does that work? KTL, so keep to let. So how does that work to if you already own a home and you want to rent it out later on? So we'll explain about that. Buy first or sell first. What is the best order to do things? What are the requirements of moving your mortgage mortgage on the next home? Tax considerations, the most fun, of course, and then it's your time to shine in your in the Q&A session. All right, let's do it. How is the current situation? So what is the current situation like in the Dutch housing market? So this is what it is. Now, this is based on the numbers till the first quarter of 2024. So you saw that there was a lot of supply in. Let me just make sure everything still goes the way I want it to, and there we go. Yes, now I can see everything. So you see in 2019, there was a lot of supply, and that kind of decreased because there was such a high demand as well. So the transfer went very quickly. And then you saw an increase again in 2022. That kind of makes sense because that's when the interest rates started to increase. So then a lot of people wanted to buy houses quickly. Interest rate increased. So then what you saw is that the interest rate was a bit higher. It decreased significantly in 2023, but it is something that we noticed in 2023 last year. Everybody had to kind of get used to the new interest rates, what we have to work with right now. So before 2022, so 2021 and before, the interest rates were quite low. And that's what we saw. Well, a lot of people want to buy then. Interest rate increases, they have to get used to the new interest rates. And now we see a decrease happening. So actually, the new properties to buy are increasing again. So the housing market is picking up. So it's always a bit of a flowing situation that we can see happening. Now, Q2, that's what just ended last Monday, of course. So we're in Q3 right now. So those numbers are not included here, but that's increasing again. So the market is booming as it is. Now, what does that mean for you? When you already own a home, that obviously means that you can sell your house for a higher value now, and then you can buy a next house for a higher value as well, because that can be a bit daunting to know that if you want to buy your next house, okay, sure, but prices are very high right now. Sure, but actually, when you move home, so when you already own a home, I mean, you can sell your property for more as well. So kind of that is a line you can follow with your property and the property that you want to buy in the end. It is always, of course, very dependent on your specific property as well. Now, when we look at the interest rates, which are also very important, then you can see what is kind of a good line to follow is the 10-year line. So that's the yellow one. So 2015 was under 4%. And then it decreased, decreased. 2022, it went under 2%, it went even around 1.5, the 10 years rate. And then we saw, start of 2022, it started to increase, like I just mentioned. The interest rates started to increase, and therefore the houses that were available kind of decreased. But now you can already see that the interest rates are decreasing again in 2024. So we can see a gradual decrease since 2023, so since last year, and a further decrease is expected. Now, there's a lot of rumors that it will suddenly drop significantly, so maybe by a full percentage. I don't expect so necessarily. We have to wait and see what's going to happen, of course. I lost my crystal ball to know for sure what's going to happen with the interest rates. But so we have to wait and see what happens. But the expectation is indeed that we see the continuous decrease will move on. Maybe during the summer, maybe end of the summer, the interest rate will decrease a bit more. So that's something we can see happening right now. Of course, we can always see what's going on with the interest rates. We always get notifications of the banks that we work with as well when they will change their interest rates. So it could well be that Bank A is the best right now, but then next week Bank B has decreased the interest rates and the conditions. So then they might be better. This is what we do. We're independent from any bank or anybody that we work with. So we can always see what is the best bank for you at that specific time. Does it make sense to stay with your current bank that you already have your mortgage with because you bought before 2022 and your interest rate is very low? So do you want to continue that, and how does that impact your mortgage? Or does it make more sense to go for a new mortgage and then have the interest rate of that time? So we'll guide you through that in our service as well, and I'll tell you something about it here as well. All right. So that was about the housing market right now. The financing options. That is very important. So you have a couple of options. When you go for full financing, so that means that you apply for a new mortgage. Let me start, actually, kind of weird maybe, but let me start with the last point, porting your mortgage to a new home. So let's say you have this beautiful home in this picture, and you're very happy with it, but you want to expand. You want to live a bit larger and maybe a bit closer to the city, and you want to continue your interest rate. Let's say you secured your interest rate in 2019, and your interest rate was 1.6%, for instance. You fixed your interest rate for 10 years. So that means your interest is fixed for 10 years, 2019, 2029, at 1.6%. Now, if you then buy a new home now, you could say, okay, sure, what happens is your current mortgage will be fully repaid. So let's say you bought a house for 400,000 euros. Your remaining mortgage is 300,000 euros. You sell the house for 400,000 euros as well, just for the sake of explanation. So the remaining mortgage will be repaid completely. So your debt will be repaid. And the 100,000 euros, that is your profit, that is yours. You don't pay capital gains tax on it, no profit tax, you just have 100,000 euros in your bank account. This is when you first sell and then buy. Now, for the sake of argument, let's say that's what you do. So then you repay the 300,000 euros mortgage that you had a mortgage on for 1.6 for 10 years fixed. Now, you did that in 2019, so we're now 5 years further up. So that means that you still would have theoretically 5 more years on interest fixed period at 1.6%. You repay your mortgage, but you don't lose the conditions of your mortgage. So how does this work? So porting your mortgage then means that if you buy a new house for instance, 500,000 euros, you still have the conditions of the 300,000 euros at 1.6% for 5 years. So you can continue that. Now you have a profit of 100,000 euros. So you put that into your mortgage, but then you still miss 100,000 euros. So 300,000 euros, 1.6% for 5 years fixed. Anything that you borrow more will be the new interest rate of that time. So what you do then, you can port your interest rate conditions onto your new house, continuing your low interest rate. Anything that you borrow more will have a new interest rate. That significantly decreases your monthly payments as opposed to going for the full new mortgage. So that's porting your mortgage. Now, if you then go to the top one again, full mortgage, that means that you don't do this. And this could, for instance, apply if you had a mortgage and the interest rate is higher than what the interest rates are now. So that means that, let's say you had a mortgage with an interest rate of 4.5%. Again, your full mortgage will be repaid. You still have the option to continue your 4.5% interest rate on a new house. But essentially, why would you? Because then you pay more. If you sell your house and buy a new one, you can decide to continue your current interest rate or to leave that aside and go for a new mortgage. No penalty applies, nothing going on there. With a full mortgage, you have choice of any bank you want to go with then, of course, considering your conditions. So then you can go choose any bank that you want with the best interest rate in your situation, best conditions. And that's what the porting your mortgage is a bit different in. Because if you port your mortgage, so continue your current interest rate for instance, 1.6% to your new house, you have to stay with the same bank. Now, obviously, we will see in our explanation, in our check, in our financial analysis, what is the best option, not only now but also in the longer term. And how do you how long do you expect to live in the property for instance? So then we can see it doesn't make sense to continue your current interest rate on a new house or to go for a full new mortgage. Then there's the middle thing right here, and that says a bridging loan. Now, it's very important to know what that is. So we discussed what it is with the current interest rate and current mortgage contract that you have. And then there's a bridging loan. Now, I mentioned, let's use the same example. You bought the house for 400,000 euros. You're going to sell the house for 400,000 euros as well. But in the meantime, you repaid your mortgage till 300,000 euros. So you have 100,000 euros equity. That's expected profit in your house. Equity means the value of the property minus your outstanding mortgage. So when you would sell the house, you would have 100,000 euros. Now, here comes the order. So what do you do first? Sell or buy first? The majority now actually, and it makes kind of sense as well, that you first buy your new house and then sell your house. Because in the current housing market, in the majority of the Netherlands, you blink twice or you snap your fingers and basically your house is sold. It's very common to have your house sold in 2 weeks, maybe a month and a half, depending on what location you are and how picky you are with the offers, of course, as well. But it doesn't have to take too long. So if you first buy your new house, then you can arrange everything, move in there, and then have your current house sold. But then, how do you use that profit? Because it's very nice to use that profit, that equity that you have in your house. How do you use that in the financing of your new house? This is what a bridging loan is. A bridging loan is a pre-financing of the expected profit in your property. So this equity, 100,000 euros, you can have a pre-financing to buy the new house. How this works is that the bank will then ask you, okay, what is the value of your current home? 400,000 euros. What's your outstanding mortgage debt? 300,000 euros. So then, depending on what bank we go with, but let's say the 100,000 euros can be pre-financed to already finance your new home. So you can already use that 100,000 euros profit to buy your new home. Then you buy your new home with a new mortgage. Part of it is this bridging loan. And then you decide, okay, everything is done. I moved into here. I painted the walls. Everything is done. Now I'm ready to sell my current house. You don't have to live there anymore. So then you sell it when the transfer is done. So when you hand over the keys, this bridging loan will automatically be repaid. So you don't have this bridging loan anymore. So this bridging loan is a short-term loan. in the period of buying your new home and selling your current one. So that's how a bridging loan works. Just a minor detail, you don't have to memorize any of this really, because you can look back and you can always check in with us, of course. But a bridging loan is an interest-only mortgage, so you don't repay on your mortgage, only pay interest over the time that you use it, maximum 2 years usually. For the time, interest only interest payments. It's automatically repaid when you sell your current house, and the interest is tax deductible. Usually an interest-only mortgage is not tax deductible, but this has an exception rule. So when it's a bridging loan, you only pay interest, automatically repaid when you sell the house without any penalty, and you pay and the interest rate is tax deductible. Right, let's continue to the next bit. I see every now and again people join here as well. Just so you know, if you have any questions, pop them in the chat. The webinar is being recorded, so you can always look back if you missed the first bit. So let's look into full financing. I already mentioned it. It's an application for a mortgage and pay the closing fees. That is separate. This is commonly used when you sell a home, and also if you don't continue the current interest rates. So like I mentioned before, when your interest rate is high and you want to have higher than it is right now, you don't have to continue that interest. So then you can go for a full mortgage on the new interest rates. It's also used when renting out your current home. And this is the keep to let situation. So what if you have your current property, you buy a new one, but you have the option to rent it out. So you don't have to sell it necessarily, but you want to rent out the property. You can, if it fits your financial situation, of course, then you can rent out your home. Now, this means that your mortgage has to be converted from a regular mortgage into an investment mortgage. Most of the times, then you will also have a new interest rate, with exceptions there, but usually we'll have a new interest rate. So that's a new full financing on new interest rate, and the lower interest rate that you already had, you can continue on your own home. So that's something that you can do. This is when renting out your current home. A bridging loan, as mentioned before, it's a pre-financing of the equity, expected profit, only pay interest, it is tax deductible, automatically repaid when you sell the house, and commonly used when first buy your next home and then sell the current property. And then here's the summary of supporting your mortgage. This is continue your current mortgage conditions and interest rates. So you can continue the current interest rates and conditions plus the interest fixed period on your new home. This is maximized, of course, to your current mortgage debt. Anything that you borrow more will be the new interest rates. Commonly used when you have a low interest rate now, and the interest rates, your interest rate now is lower than the interest rates that banks offer right now. So this a short summary right there. All right, that's being that mortgage process. So how does this all work? Before you start, think about the following. Think about if you want to sell your property first or if you buy your property first. Depending on your choice, of course, you can finance in full or arrange a bridging loan, for instance. Even if I mentioned before that you continue your current interest rates and on your new house, this is commonly used when you first buy and then sell. But even if you first sell, so you want to get rid of your house and you're perfectly fine renting a couple of months and then buy a new property, you can even still continue your current interest rate, even though the whole mortgage is repaid. You can still continue the interest rate and the conditions on your new mortgage. But usually, kind of depends on the bank, but usually if you buy the new house within 6 months after selling your current one. So there are definitely possibilities there. Be sure that you know what's going on for you and what makes the most sense. First buy, then sell, or first sell, then buy. There's no wrong or right. Be sure to be well informed when you make the decision here. I would also suggest to do that well in time, because then if you already know what you're going to do, the house hunt is significantly less stressful because you already know exactly what your situation will be. Right. Requirements. So that's also very important, of course. So the requirements for a mortgage when moving homes, to be fair, it's pretty similar to when you buy your first home as well. It's mainly based on income and you need some savings. Maybe. Why is this maybe? So it's pretty similar as mentioned before. So you need an income that has to be out of employment or self-employment, regular incomes. If you have questions about that, how it works with temporary contracts or freelancing, schedule a call with us and I'll explain everything about it. Of course, the property value is very important, but let's focus on this savings bit, and especially why it says maybe in brackets. So usually when you buy a home, a couple of fees that you have to pay are your financial advisor, of course, your real estate agent, the appraiser, so the valuation report to determine the value of your property, the notary, and most likely the transfer tax. Transfer tax being the 2% transfer tax that you have to pay the tax authorities when you buy a home from somebody else. Now, why do you maybe have to input savings? It's because of this bridging loan that we discussed before. So let's use the same example. If you sell a house for 400,000 euros with a mortgage of 3, let's say the bridging loan can then be 100,000 euros. So then you have these 100,000 euros and you can use that for the purchase or financing of your current property, or of your new property. So purchase and financing. So all the financing costs you can also include in this bridging loan. So this could well be, if you have sufficient equity in your current property that you want to sell, and you have sufficient income to cover the mortgage on a new home, then you can pay all the fees that you have to pay through the bridging loan as well. So you don't have to input any of your personal savings, which can be very nice because then you can use those, for instance, for decorating your new home, or maybe to redo the kitchen, or anything else really. It gives you some financial flexibility right there. So that's interesting to check out if that applies to you, and then you can be more flexible with the input of your personal savings. Obviously, this is something that we'll advise you about as well throughout the whole process. Mortgage on the next home, the duration and the taxes. Now, strap in, because this is a bit more in the deep dive in the rabbit hole of financial mortgage talk, let's say. First off, the duration. That also has kind of a tax consideration here. Let's say, same example. You bought your house in 2019. It was your first home. And you bought the home for 400,000 euros, and then you repaid your mortgage until 300,000, down to 300,000 euros, maybe with some additional repayments that you did. So the situation now is you still you can sell the house for 400,000 euros. Your mortgage is 3, and then you want to buy your next home. The next home that you buy is 500,000 euros. You use the equity, 100,000 euros. So then from 500,000 euros, the financing bit is 400,000 euros. 300 is your existing mortgage, and you need an additional mortgage of 100,000 euros, just to kind of get things straight there. What means, what I just mentioned, you can port your current interest rate of 1.6%, for instance, on the 300,000 euros. You can continue that on your new mortgage. So it's 300,000 euros. Then you still have that 100,000 euros that will have a new interest rate, as I mentioned. All good. Now the duration is good to keep in mind, because you started in 2019. Your duration of your mortgage is always 30 years from the start point. So the 300,000 euros is started in 2019, so ends in 2049. So right now we're 5 years in. So the remaining duration of the 300,000 euros mortgage will be 25 years. So that means that we have to consider that in the calculations as well. The new part of that new 100,000 euros that you borrow more, that will start a new 30 years duration. So there's a break in your mortgage. It will definitely be with the same bank. It has to be with the same bank, but you have 2 mortgage parts. You could say, okay, sure, but then I have to pay that 300,000 euros back in 25 years instead of 30, but then my monthly payments would be higher relatively. Sure, that is true, but you would, it is strongly recommended to do that because you have a maximum duration of 30 years for tax purposes. When you own a home and you live in it yourself, you pay interest over it, you have a tax benefit over part of the interest rate that you pay. The ruling is that you have to have a repayment schedule of 30 years over your mortgage. If it's 31 years, then your whole mortgage is not tax deductible anymore. So you're not eligible for any tax benefit anymore. So that's why you need to keep with that 30 years repayment schedule. That you sell your house and your mortgage is repaid, that is just for the bank's perspective. For the tax authorities, they still consider, okay, sure, you started repaying the 300,000 euros in 2019. You do that in 30 years, so you have 25 years remaining. Might sound a bit weird, I fully understand, because your mortgage is repaid. but then not for tax purposes. For tax purposes, you're still working on the repayment schedule of 30 years. So there you have a break there. I know it might sound a bit out there. Again, just checking with us and we can give you a clear outline of what that would mean for you. Now the taxes is what I mentioned. The tax benefit is the main point here. Make sure to consider that shorter duration as well. One other thing, and this is one step further. You sell your house for 400,000 euros and you have a mortgage for 300,000 euros, so that means you have an equity of 100,000 euros. In the examples that I explained just now, throughout the whole presentation so far, is stated that you use that 100,000 euros for the financing and purchase of the new house. Let's say you don't. Let's say you say, no, I want to have 50,000 euros because I want to take a year off or half a year off and I just want to travel the world for a bit. That means that 50,000 euros of that equity is not used in your new home. I mentioned before, if you sell your house, the profit that you made is not taxed, which is still true, but the tax authorities wouldn't be the tax authorities that they will if they wouldn't get you in some way. So what do they say? The profit is not taxed, but you do have to use that in your new home. Whatever amount of that 100,000 euros equity that you didn't use to purchase your new home, that part you will not have a tax benefit over the interest rate in your new mortgage. Example, you sell the house with a profit of 100,000 euros. In your new mortgage of 400,000 euros, you only put in 50,000 euros. Then the other 50,000 euros of your 400,000 euros mortgage, the interest rate is not tax deductible. So you have a lower tax benefit if you don't use the full profit that you made over selling your home. Is that wrong? No, not necessarily. Does it make a massive difference on your monthly payments? No, not necessarily either. You have a slightly lower tax benefit, so your tax return will be a bit lower. It could also mean that your maximum mortgage is impacted a bit. It can definitely be manageable, and a lot of people want to use that equity that they build up as well for a different purpose. You can definitely, no problem. Just make sure, again, I cannot say it enough, before you make any final choice, make sure what that choice is and that you're well aware of what the consequences are. Obviously, something that we will walk you through. So enough about taxes in this part. Let's discuss about the process. So what kind of steps do you need to follow? Let's say you start this month, July 2024. The first step, very important, the financial analysis. And that's basically everything I just discussed is we make it personally to you. So we need some documentation, of course, a salary statement, a contract of employment, or if you're self-employed, your results over the at least 1 year, preferably a bit more. We can work with anything there, but at least 1 year. We can then see, okay, sure, what is your mortgage capacity? Do you want and do you need a bridging loan? Do you want to sell your current house? How do you want to deal with that? Do you want to port your interest rate? So do you want to continue your interest rate on a new mortgage, or do you want to go for a full new mortgage, brand new, sparkling and everything? We can check that out and then discuss different scenarios also. You don't have to be final in your choice right there. We can always adjust the calculations whenever you need to. This is also where our service starts, and then we just continue on throughout the whole process. Whenever you find a new property, we'll recalculate everything. Even though if you just say, well, hey, Robin, what would it be like if my monthly payments of my new mortgage will be an X amount and the bridging loan, Any variable we can tweak throughout the whole house hunting process, regardless of how long it takes, basically. Now, let's say then we did the financial analysis that can be done within a week, really. Then you continue your house hunt and, of course, your bidding. When you every property that you're interested in, send it to us. We'll make sure that the analysis is redone. And then when you want to bid on a property, when you want to put in an offer with your real estate agent, let us know for sure, because then we can help together with the real estate agent. We can help optimize your offer to make sure that the seller is very likely to accept your offer rather than somebody else's. When your offer is accepted, happy days, of course. That's the moment to collect the required documents for the mortgage application. And then we'll take care of the whole mortgage application, arrange the bridging loan, port the mortgage, whatever is needed. You don't have to go to the bank. You don't have to do anything, really. You can just sit back, relax, and we'll take care of everything, as long as we have all the information and documents, of course. That's the only thing you need to do. Now, when it comes to a mortgage application process, I know the banks say that they need about 4 to 6 weeks. Not entirely sure what to do the rest of the time. Usually, a mortgage application can be done in about a week, maybe 2, if it's a more complicated situation, or a slow bank, that might take 3, but usually in a 1 or 2 week period. Then you can, the mortgage is approved, and then you can go to the notary for the transfer appointment. So that means that you get the keys of your new house, you confirm that you have a mortgage, that's it. Then, of course, after that, you can sell your current property as well, and the same process basically happens, but then about selling your house. So you put it on the market, people will put in their offer, and then you are the seller that can decide, yes, I want to go for this, this, or this offer, of course. So that's the process in a nutshell. So what do you have to consider after you moved to your new house? This is really regardless of if you buy a new house or an existing house, if you buy your next house or your first house. Of course, update your address everywhere. Make sure that everything is arranged. Also move or change your utility contracts, so water, internet, electricity, gas, you name it. Our partners can help you with that, free of any charge. They can arrange that your contracts are continued on your new address to make sure that when you move in, you actually can take a nice little bath, or you have internet connection, because like the saying goes now, home is where the heart is. Sure, home is also where the Wi-Fi connects automatically, of course. So that will then be arranged there. Also, arrange your taxes, your tax benefit that you have when you own your own home. You have a tax benefit. You can have benefit from that per year or per month. Not a financial benefit necessarily. It's exact same amount, just the frequency of payout is different, or it's per year, or you can have it per month. Just if you haven't done this before, basically how it works, you have your gross monthly payment that you pay the bank every first business day of the month. If you go for the monthly tax benefit, every 15th of the month, the tax authorities will transfer your tax benefit to your account. Gross monthly payment minus tax benefit is your net monthly payment. So that's basically how it goes. Again, we'll discuss that during a personal call as well. You only have to apply for that once if you want, and you can change that whenever you like, per year or per month. So then you're well prepared and happy days living in your new house. So how can we help you? What are the next steps? Like I mentioned, our financial analysis will give you a full scope of what your options are in different scenarios, buying or selling your new property before you buy before you sell. If you want to sell your house, do you want to keep it to rent it out? Is that possible in your area? Is it possible when you bought the house, or should you consider different things? Consider when you buy an apartment, where you own an apartment, is your homeowners association okay with you renting out? All of that, we can discuss different scenarios there. Do you want to port your mortgage? Again, can't say it enough. You can if you want to, but then we can see what the best option is for you. And do you need a bridging loan, and what are your options there as well? Now, all of that we can see in our financial analysis. If you need some documentation, if you go to our website and click on the button that is highlighted right there, start today, then we can run the analysis and see exactly what you can do. If you first have some questions, then you can go to schedule a free call, and we can explain everything about what your situation is. Very basically, if you upload your documents, we can be more specific. Right. That's about it for now. If you want to schedule an appointment, make sure to scan this QR code, and then you can schedule a call right away with me or one of my colleagues, of course. If you want to know more about specific mortgage topics, also you can always follow us on YouTube, Instagram, TikTok, or LinkedIn. That's where we share information as well, because that's one of our cores as well. We just want to be able to share information to you guys, to make sure that you make the right decision based on the right information as well. So whenever you have questions, or you read something online and you think, well, hey, that's different from what I heard before, just schedule a call and we debunk what needs to be debunked, or we nuance what needs to be nuanced as well. Thanks for your time right now. I think, Egle, it's time for the Q&A. Have you seen some questions coming in?
Yes, we have a few questions. I think the first question is not really related with moving homes, but maybe you can also answer it.
Sure.
I would like to bid on a house without financial close to be more competitive. I have enough available cash on hand to pay the seller, but for short term, is it possible to get a mortgage after paying the seller? Would that be, or should that be before transferring the deed?
Very interesting situation.
I don't have any assets ongoing mortgage in the Netherlands, so I'm starter in this market.
Sure. Yeah, I understand. Zainab, thank you for your question, first of all. Very good one. So let's first tackle the first one, the financial clause. Fully understand that you want to put in an offer without a financing clause. This is also where our financial analysis comes in. So we do our financial analysis is so thorough that is more thorough than banks do really in their assessment, because all banks have different considerations, etc. We just want to be sure that you meet the requirements of getting a mortgage. So our financial analysis is so thorough that we can always say before you want to put in an offer, if you can leave out this financing clause. This is what I meant by optimizing your offer together with the real estate agent. So that's something we can check already. If you have sufficient cash on hand to just pay the property in cash, yes, you can. If you then later want to secure a mortgage, yes, you can too. For tax purposes, make sure that the mortgage is completely done and confirmed at the notary within 6 months after buying the property cash before the transfer. Because then if you do it within 6 months, your interest rate is still tax deductible. So you still have a tax benefit over your interest rate if you finance the property within 6 months after paid in cash. Very specific question, of course. But also when you want to sell your property, want to buy a new property, you already own a house and you want to be competitive and not have to have the financing clause, we can prepare everything in such a way that you can and have the best chance of indeed being competitive in the current market.
Perfect. How much of a bridging mortgage is deductible?
Yeah, very good one. It's the deductible in the same way that the rest of your mortgage is tax deductible. So it's a bit of a deep dive, but basically there's this kind of a weird tax that you pay in the Netherlands, and there's the own property forfait, or in Dutch the eigen woning forfait. What this means is the pleasure of owning your own home. That's what you pay taxes over. You don't pay capital gains tax, but you do pay taxes over the pleasure of owning your own home, because you have fixed monthly payments, you build up equity, etc. So how it works, you pay a total amount of interest over a whole year. Subtracted is that own property forfait, depending on where you live, that is a certain percentage of your WZ value. So then you have a remaining amount of interest payments that you did, and that is where you get 37% back over. So essentially you get 37% back over part of the interest rate that you pay. That's how it works. Total amount of interest, including your bridge loan, is all put on one pile. Subtracted is the own property forfait. The remaining amount of interest that you've paid is tax deductible for about 37%.
Mm-hmm.
We will give you insight, by the way, when we do our scenario checks and overviews. It states what your gross and what your net payment would be per month. So if you have a tax benefit per month, but we'll also show you what your tax benefit would be if you only do it per year. So you will have this all laid out for you when we do the calculations, including the bridging loan.
Okay, thank you. And maybe you can provide example, an idea of the monthly payments of the person would be paying before deciding to buy a house, and how much would roughly be the bridge mortgage payment, an example.
Yeah, that's very tricky, but if I just follow the example that I just mentioned, so let's say 100,000 euros bridging loan. The interest rates of a bridging loan are usually a bit higher than a regular interest rate because it's a different product. But let's say it is a 5.5% interest rate, interest only. Then per month, that would be about, let me see. And yes, there we are. About 450 euros per month. That would be, and that's the gross monthly payment. Really rough explanation. Of course, this depends very much on your personal situation as well. And what the tax benefit would be in that situation, that's no way to tell, because we need specific information of the new property that you buy. But again, this will be laid out very specifically when we have that information and run the calculations for you.
Maybe Robin, you can check the last question yourself, because it's quite a situation.
On the disadvantage of not putting the profit into the mortgage, my husband sold his house in 2022 and did not buy another house yet. Will the profit amount be deducted from the next mortgage later? Is there a limit of... Yes, there is. It is a very specific indeed, but very, very well done, Zeynep, for sure. Yes, it's ongoing year plus 2 years. So you now have 2024 is the ongoing year. So to the end of 2026, you would still have you still have you should still input the savings into your new home, if you the profit into your new home, if you bought a house in the Netherlands, of course, that is. So when your husband sold his house in 2022, then that is the ongoing year. So then you have 2023, 2024. So before the end of this year, you still have to use that cash into your new house. If we exceed that time and you haven't bought a house in the meantime, as of 2025, you should then be able to buy a house just regularly. Again, be sure to schedule a call with us with all the detailed information, because then we can be very specific about what that means for you, because that's a significantly better way than on the basic information that we have right now, of course.
And the last question, we just got it. Does 30-year duration apply to people over the age of 60 for new mortgage?
Yeah, very good question. Yes, it does. Age is not a factor necessarily. You can be 90 and secure a mortgage for 30 years. Of course, maybe we will never debate about how long we expect you to live. So that's all right. Maybe you're the one that turns 180, of course. And basically, in the end, the bank will just consider, okay, that you have a duration of 30 years and your income, that's the most important thing. So if any income is very secure, that is pension income, because you will have that usually for the rest of your life. So they're perfectly fine. If you're 60, there is one other thing. When you're within 10 years of your retirement age, 67 in the Netherlands and a couple of months, if you're within 10 years of that, then the bank does want to know, okay, sure, we can supply the mortgage based on your income now, but they want to know that you can also still pay for the mortgage after your retirement age. So we also need your pension income then to see if you can still afford your mortgage, which kind of makes sense because you want to be able to live in the house still. Now we can work with that because usually your income now can be a bit higher than your pension income, for instance, although your taxes will be lower when you're retired. So all of that will be taken in consideration. So we can, for instance, then also say, okay, sure, it is your first mortgage, but what we'll do if you're 60 now, and we know 67 is your retirement age, you have one mortgage part that we know that you can just afford on pension income as well. So that it can just be a fixed amount, let's say 500,000 euros. And anything that you can borrow more for the first 7 years until retirement age that you can afford on income right now, we'll make sure that you repay it faster. So you might be able to get a mortgage for 550, where 50,000 euros will be repaid very fast in 7 years. So then you're left with a mortgage that you can pay indefinitely based on your pension income.
I have 2 more questions. Can you support your cash flow with a cash flow from outside the EU? I mean, in addition to your salary, can you add income from your business interest abroad?
That took a lot of turns, which I like, for sure. Income from abroad can be considered, but only if it's from employment. So if you live in the Netherlands, but your employer is in the UK, in the US, or wherever it is really, we can consider that, but only if you're employed there and you're not a business owner. So business income and rental income, for instance, that is not income that will be considered by Dutch banks as of yet. At this time, I mean. So right now, there's not a possibility if you're employed abroad, even with foreign currency, so non-euro income, there are definitely possibilities there. But from a company, your company has to be registered in the Netherlands for at least 12 months, and then banks will consider that income. Before that time, no.
Thank you. And the last question, I think, what will happen if using the 100K profit, I want to reinvest in stock? Do I have to pay taxes?
We have that same example. Let's say you buy a house for 500,000 euros, but you had a profit of 100,000 euros from selling your previous home. Then the tax authorities expect you to put that 100,000 euros into your mortgage, into the purchase of your new house. So you don't have a mortgage for 500, but of 400,000 euros. If you say, no, I don't want to do that. I want to use that 100,000 euros and invest it in stock options or any other way of investing, could very well make sense because the interest rate that you pay is, let's say, somewhere around 4%. If you have investment opportunities that give you a better result, better return on your investment than 4%, by all means, you can do that. It does mean that from your mortgage of 500,000 euros, the tax authorities expected you to put in 100,000 euros to reduce the mortgage. You didn't. So therefore, the mortgage part of 100,000 euros that you didn't input out of savings, you don't have a tax benefit over the interest rate for that part. So your tax benefit will be lower on your mortgage. Also can affect your mortgage capacity, so what you can borrow. That very much depends on your income, of course. I see a question coming in from Letitia. You mentioned that we can include the fees in the new mortgage, right? But will this mortgage part also be tax deductible? Yes and no. It very much depends on the specific situation. So a mortgage in the Netherlands will be supplied on a maximum of 100% of the property value. Your bridging loan doesn't have to be within that 100%. Your bridging loan can be on top of that. So usually when you buy a home, you cannot include the mortgage fees in your base mortgage. But if you have a bridging loan, then you can use, so that's pre-financing of the expected profit. That is what you can use to pay for the fees. And then, yes, this bridging loan is tax deductible. So yeah, in that sense, it will be, yeah. If you actually include it in your mortgage because you bought a house for significantly less than what the value is, then it's a whole different story. I'll get to that in the specific situation because that's a bit too niche. But yes, you can finance the fees within your bridging loan mortgage. Regularly, your bridging loan mortgage is tax deductible. Let me adjust what I just said because the fees that you pay for your mortgage, those are tax deductible. So you cannot have two tax deductions. So if you want to have the fees paid out of your bridging loan, we'll consider that a small part of your bridging loan is not tax deductible. A very niche detail, but we'll consider that in our calculations, of course.
That's it, I think. We don't have any more questions for today.
Right. Well then, thank you so much for attending this webinar. I'm very happy to tell you everything about it. Now, again, if you have any questions about it, or if you have very personal questions that you don't necessarily feel comfortable discussing during this Q&A, makes perfect sense. Just scan this QR code or go to our website and click the schedule free call button. And I'm very happy to me or my colleagues will then have a call with you to discuss any of your questions or any situation that you might face. Let's take it back to you, Karim.
Thank you so much. I'm just going to put the link for Mr. Mortgage in the chat. Thank you all for all being here during your lunchtime, and thank you, Robin, and Egle. Robin, Egle, thank you for the amazing job and all the amazing information. And yeah, do reach out to Mr. Mortgage, and we'll definitely see you in the next webinar. Have a wonderful rest of afternoon.
Yeah,
I'm going to go back to the beach.
Very good. Enjoy. Make sure to wear some sunscreen, and everybody enjoy your lunch, enjoy the rest of your day, and see you the next one.
Will do. Thanks, everyone. Bye-bye.
Bye.